Namaste doston, I am Vikram and you're watching Market Insights with Vikram, where we talk about the market but always with a smart perspective. Have you ever noticed sometimes the market looks super strong and then suddenly the mood just flips, like someone turned off a switch? You saw Friday's momentum, right? Bulls were fully in control and now, just before Monday, global cues have turned heavily negative. Is this the calm before the storm? Or is this another smart money setup that only a few people are able to catch? In today's video, we're going to decode this exact puzzle, but step by step. First, we'll look at Friday's complete market setup, the mood of Nifty Bank Nifty technical zones. Then we'll talk about global cues, which honestly have gone into a bit of an ouch zone. And finally, we'll understand what the latest FII-DII data says about the market's inner confidence. And yes, by the end of the video, you will have a clear idea of which way Monday's sentiment could tilt. But to reach that conclusion, you'll have to watch every part carefully because every segment is a clue, and if you miss even one, the story will feel incomplete. So don't go anywhere because today's analysis isn't simple, it's layered. And if you truly want to understand the pulse of the market, then make sure you watch till the very end. If you're a new viewer, don't forget to subscribe to the channel. Here you get detailed analysis every day, from pre-market insights to market close updates, which can be valuable for any trader or investor. So, Friday's market scene was honestly electric. One of those moments where you just feel like, man, this momentum is saying something different. Nifty 50 opened at 25,167.65, and from there the rally just didn't stop. At one point, it hit a high of 25,329.60 and closed at 25,285.35. Clearly, bulls were in full command. The candle that formed on the chart was textbook bullish, higher highs, higher lows, meaning the market said, I am not stopping yet. The trading range was interesting too, around 171 points, so volatility was healthy but controlled. And the biggest signal, it held above 25,200, a psychological barrier that looked hard to break, but today buyers proved the sentiment is fully positive. And if we talk about momentum, Bank Nifty totally stole the show. A solid 0.74% jump, closing at 56,609.75. What a pace! Opened at 56,168.60, hit a high of 56,758.70 and buying stayed steady throughout the session. PSU banks really rocked it. PNB up 2.1%, SBI around 2% up, as if the market was saying confidence is back, let's go. Technicals confirmed it too. It crossed the 78.6% retracement. That's big because that's usually a reversal zone. So yeah, Bank Nifty gave a strong comeback signal and traders are getting aggressive again. Now, talking about Sensex, it wasn't far behind either. Closed at 82,500.82, about 0.40% up, and the resilience it showed was impressive. Opened at 82,075.45, hit a high of 82,653.37. Clearly, large caps led the show. The 82,000 psychological support stayed intact, and now the market is near a crucial resistance zone. There's a bit of tension here because from this point, either we'll see a breakout or short-term profit booking could kick in. But before that, if you haven't hit like yet, seriously, one click doubles my motivation, and don't forget to share so your friends also get this real-time market insight. And yes, subscribe because that's where the energy comes from. Alright, let's start the pre-market insight for Monday. The numbers that came out at the end of Friday were full of drama. You literally feel that the Monday's mood is quite uncertain. On one side, GIFT Nifty showed a slight bleed, down minus 0.78%, closing at 25,200. Looks like a small drop, but it adds a bit of caution to the sentiment. And yeah, that's just the beginning. Now let's glance at the global scene. Dow Jones slipped badly, closing at 45,479.60, almost minus 1.90% down. Nasdaq got hit even harder, closing at 22,204.43, meaning the tech-heavy index saw a sharp reaction. S&P 500 also fell minus 2.71%, closing at 6,552.51. This clearly shows global risk sentiment is negative and sets a slightly bearish tone for Monday. Basically, this combination, domestic GIFT Nifty's mild drop and global indices' sharp fall, suggests Monday's market could start in a cautious negative mood. The probability of a gap down is high, meaning there could be early pressure at open, but sometimes these very setups lead to bounces too. So staying alert is key. Now let's look at the psychological angle. Traders should take this as a warning not to over-leverage positions and to focus on risk management. Because when global indices bleed like this, domestic markets often react instantly. So yes, panic selling or sharp moves can be expected, and the early hours on Monday will be critical. Also remember, in the past, Nifty has bounced back even after such weak global cues. So it's not right to go fully negative either. The tone is cautious, yes, there is tension, but if domestic triggers stay strong, like rupee support or falling crude, mid-session recovery is possible. Patience and alertness both are essential. So the summary, Monday's market might open cautiously negative, most likely with a gap down, but during the session, depending on domestic cues, a bounce is also possible. Basically, it will feel like a roller coaster ride, so plan your strategy logically and keep your emotions under control. And interestingly, the data side was also speaking volumes. FII bought around 459 crores on Friday, meaning foreign investors showed some trust. Cautious, yes, but still, the real heavyweight move came from DIIs. Domestic institutions bought nearly 1,707 crores worth. That's like when the foreign hand hesitated, the domestic fund said, all right, we got this. Now, Monday's market scene looks a bit tricky, honestly a bit suspenseful. You'll feel that the market's mood can flip anytime. One moment things look stable and the next some drama starts. And believe me, it's never predictable. Let's check the global cues first. US has imposed 100% additional tariffs on China, and that's creating global tension. Markets could turn nervous, volatility could spike, but the funny part is some experts say this could push crude oil prices lower, which might actually be good for India. Ironic, right? Global tension and domestic relief at the same time. US stocks were also weak, with S&P 500 down 2.7%. That directly affects global risk sentiment. Traders need to stay ready because sharp moves can happen anytime. And yes, falling crude prices are a relief for India. It helps control inflation and gives some positive support to domestic sentiment. Now talking about the domestic side, India and the UK have signed CETA, which can create around 1.4 lakh new jobs, especially in the gems and jewelry sector. That's a solid confidence booster for investors. Silver prices are at record highs, rupees 1,65,000 per kg. That shows a bit of inflation pressure, so watch out, because sometimes that makes markets hesitate. The rupee is also feeling stronger, appreciating by 7 paisa against the US dollar, now at 88.72 per dollar. Positive sign because it keeps import costs in check and supports the market slightly. And IPOs, Tata Capital and LG Electronics IPOs saw massive oversubscription, showing strong domestic investor confidence, and yes, that adds some excitement too. So the summary, despite global tensions, India still has a few strong positive triggers that can support the market. But yes, unpredictable moves can still come, so Monday demands alertness. Crude is falling, rupee is strong, CETA and IPOs are boosting confidence. Just remember, we can't ignore global volatility. Now let's talk about important support and resistance zones for Nifty 50, Bank Nifty and Sensex. See, the situation's gotten a bit tricky. Global cues are in full unpredictable mood. When you see headlines like 100% US-China tariffs, the market mood can literally flip in a second. One moment everything looks stable and the next sentiment completely reverses. This uncertainty, that's the biggest challenge right now. So yes, we are looking at technical zones, but frankly, take them as reference zones, not guarantees. Because when global waves hit, even the charts look sometimes helpless. Let's start with Nifty. The support zone is currently between 25,185 and 25,084, and if more pressure comes, it could slide down to 25,011. That's also a psychological base. If it bounces from there, momentum can pick up again. But if this zone breaks, then the market could show emotional reactions. Panic candles, sudden volume spikes, that whole scene. On the upside, resistance zones are crisp, 25,354, then 25,432, and around 25,532 supply pressure could appear. These levels have reacted before, so traders might book profits there. But if sentiment stays strong, these resistances could be tested one by one, like climbing stairs, pausing briefly on each step. Now let's talk about Bank Nifty. The support zone starts at 56,255, then extends to 55,900 and 55,647. This region is like a psychological cushion. If the market bounces from here, traders' confidence could return, but if it breaks, panic mode can trigger, and believe me, you'll see sudden volume spikes and sharp moves. At such moments, patience and discipline become everything. On the upside, resistance levels are clear.
56863, then 57115, and above 57470. These are the zones where selling pressure or profit booking can appear. But again, if sentiment stays firm, the market could test these levels one by one, moving up step by step, pausing slightly as if it is thinking, should we go higher or stop here? Alright, now for Sensex, the support zone starts around 82164, then 81828, and extends down to 81583. This area acts as a psychological cushion too. If the market bounces from here, confidence among traders can return. But if it breaks, panic mode will activate, and believe me, sharp moves and sudden spikes will appear. At such moments, truly, patience and discipline become everything. On the upside, resistance is clearly defined, 82746, then 82990, and higher near 83327. These are levels where sellers might show pressure or profit booking can happen, but if sentiment stays firm, the market could test these levels one at a time. Alright friends, that's it for today's session. If you found this analysis valuable, please like the video and tell me in the comments which sector or stock you are focusing on. And if you haven't subscribed yet, do it now because
Here you get daily pre-market analysis updates. See you in the next update. Safe trading, smart investment. Jai Hind. Namaste